Real-time real estate segment brought to you by rsrmoney.com. Experts say mortgage rates may fall below 6% later this year. I just heard another one. I think it was from the California Association of Realtors, their chief economist. I think he was the latest one. A lot of confusion in the market about what's happening with day-to-day movement in mortgage rates right now. But here's what you really need to know compared to the near 8% peak last fall. Mortgage rates have trended down overall. And if you're looking to buy or sell a home, this is a big deal. While they're going to continue to bounce around a bit based on various economic drivers like inflation and reactions to the Consumer Price Index or CPI, don't let the short-term volatility distract you. The experts agree the overarching downward trend should continue this year. While we don't see the record low rates home buyers got during the pandemic, some experts think we should see rates dip below 6% later this year. As Dean Baker, senior economist, Center for Economic Research, says, quote, they will almost certainly not fall to pandemic lows, although we may soon see rates under 6%, which should be low by pre-Great Recession standards, unquote. And Baker isn't the only one saying this is a possibility. The latest Fannie Mae projections also indicate that we may see a rate below 6% by the end of this year. And we get all kinds of rate projections all the time. We're always watching those. Got a chart here for you if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490, FM 98.1 video feed. You're seeing that, according to Fannie Mae, they're projecting third quarter 2024, 6%, fourth quarter 2024, 5.8%. That is the chart from Fannie Mae. It includes one that came out in December and compares it to the updated 2024 forecasts. Yeah, 2024, originally the December forecast, they were saying 6.5% for the fourth quarter this year. Now 5.8. Nice. If you're closer, you'll notice the projections are on the way down. It's normal for experts to reforecast as they watch current market trends and the broader economy. But what this shows is experts are feeling confident rates should continue to decline if inflation cools. What this means for you? Remember, no one can say for sure what will happen and by when. And short-term volatility is to be expected. So don't let small fluctuations scare you. Focus on the bigger picture. If you found a home you love in today's market, especially where finding a home that meets your budget and your needs can be a challenge, it's probably not a good idea to try to time the market and wait till rates drop below 6%. With rates already lower than they were last fall, you have an opportunity in front of you right now. That's because even a small quarter point dip in rates gives your purchasing power a boost. Bottom line, if you want to move last year, but we're holding off hoping rates would fall, now may be the time to act. Let's put together a game plan. All you need to do is give me a call at 800-306-1990, 800-306-1990. Now, here's the issue right here for you to remember is if and when rates fall, which I'm sure they will, they're always in a cycle. If and when rates fall, generally real estate values are going to go up because more people are going to get into the market. And one of the things I want you to be aware of is appreciation does not revert. So if you find the property right now that you like, maybe you need to stretch a little bit to get it. Go get it now. Don't worry as much about the rate because you're locked in. Now, you're locked in on the price too. If you wait and prices do go up as we forecast they will, you can't go back to today's pricing. Now, you're locked in on the rate then, so your payment's not going to go up. If the rate goes down, you're not locked in. You can always restructure your loan and get a new loan. So you start collecting that appreciation. It's not like you put it in the bank, but your property value goes up, which we forecast it will, and you can get your payment to drop. Just throwing that out at you. It's a good point for you right there. And you'll see some advertisements about rates dropping, so go refinance now. Do not be the first to refinance. I'm just going to throw that out there for you. You don't want to be the first one because rates generally continue in a cycle. So when they started going up, they went up and up and up. They generally will go up faster than they go down. When they start going down, just let the cycle continue. Give us a call. We'll help you with to attempt with the forecasting and what we're seeing, because you don't want the lowest rate when they start going down. You want to get the rate just when it hits the bottom before it turns back up. We can help you try and forecast that. No one's going to be perfect, but we do have some good tools and contacts that we're always watching.